Hello, welcome to Global Weltrade Synthetic Signal Provider Service Channel. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to refer this channel to your network so that YouTube will push us to a very high level of audience. Okay. In today's video, we shall discuss a great idea, mathematical driven idea that will actually help you to face the market squarely and make you to actually stop fearing the market. Okay, you will not be afraid of the market. Yes, you should have certain level of fear, but you should not be too much, because when the fear is too much, you may not be able to take some good trades, or when you have some good trades, you may not be able to make much profit from it. Okay, so this topic is going to give you more encouragement to succeed as a trader. Okay, so the topic is a Heaviside step function applied to Forex synthetic market. Heaviside step function applied to Forex synthetic market. You see, the price movement is a function, is a mathematical function. So since it's a mathematical function, we're gonna deploy some mathematical ideas. We're gonna deploy convolution principles. That means we are going to convolute the price function with another function. So this function is going to be a switch. It's going to switch the state of the price movement. So it's going to select certain signals, like it's going to help us to select certain signal and reject certain signal. It's going to activate certain signal and absorb certain signals. So our interest will be on the activation. Our interest will be on impulse signal. So we will use the Heaviside step function to activate impulse signal and create the impulse, and use it simultaneously to reject retracement signal or destroy, like zero the retracement signal, make it to be absolutely zero. Okay, so that is, by the way, Heaviside is zero unity valued function. That means a Heaviside step function can take the value of 0 or 1. It's like binary stuff. It can take the value of 0 or 1. So Heaviside step function is zero unity valued function that switches on or off another function based on cycle state of that function. So that function there means main function or cyclic function. So the function have to be periodic, and the Heaviside step function have to decide when the function is on or off. So we are going to switch on the price movement function whenever the retracement function is dead. So we want that session, that cycle of price movement that is active when the retracement function is no longer active, when the retracement function is 0. That is the work of this Heaviside step function. So Heaviside step function is equals to 1 for some time t, or Heaviside step function u of t is equals to 0 for some time t. Okay, so its value depends on cycle state of the market. So the market have cycle states. So as I read down, you'll be able to learn this. Conventionally, we start with impulse function. Then retracement function, okay, range, okay, then cycle repeat. So the market have to impulse, then retrace, maybe range, and then the cycle repeat. Idealistically, so this thing happen idealistically, because in practice it may not be exactly the way I said it here, but if you understand the idealistic behavior of a particular stuff, you can be able to use it in real world if you can smartly adjust certain things. And that is why you need to enroll for mentorship courses and actually subscribe to our VIP signals, because we actually have what it takes to make this thing realistic. Okay, so let's ignore range be ignored. Okay, let range be ignored. Like let range function be ignored. Okay, IR state makes U of t equal to 0. Now what does it mean? The impulse retracement state, like when the market impulse and then retraces, then U of t will approach 0. Like it means U of t is about to approach 0, because this time around the retracement is being switched off. That's what it means. But if we have retracement impulse, it means that U of t is going to be 1, meaning that the market have actually retraced in the past to infinity, and therefore the impulse have to take over, meaning that we are going to switch on the impulse by setting U of t equals to 1, meaning that the impulse is switched on. And so you also as a trader have to start trading the impulse. So the price function P of t is I of t dot U of t. I of t dot ui of t plus R of t dot ur of t. The I of t means the impulse function, and the ui, that ui is supposed to be U subscript I, meaning that the Heaviside step function during the impulse period. Okay, because the market have impulse period and retracement period. Okay, and they are independent, so the impulse have to happen and then the retracement have to happen and then the impulse, so they are independent. So we have this, the U subscript R means the Heaviside step function during the retracement period. Okay, now we also define M. Like you are going to define this M from top-down analysis. So what you observe on the market from top-down point of view. So you have to observe the market from the highest time frame to certain other higher time frame, especially from the monthly to the 4 hours. And then whatever you see, make sure is consistent, make sure they are similar, make sure they are the same, like you are seeing the same thing. So you want to make sure that when you have done your top-down analysis, the overall slope, which is M, or the overall gradient, which is M, is well defined, is either positive or negative. So the monthly should be positive, should have a positive gradient, the weekly should have a positive gradient, the daily should have a positive gradient, the 4 hours should have a positive gradient. But there is no guarantee they should all have the same sign, like they should all be positive. There is no guarantee, but when they do have the same sign which is positive, when they are all positive, it means that the signal is strong. But if they are not, the algebraic sum of these polarities should amount to the one you want to, like should amount to what certain other higher time frames are saying. So if month is positive and then maybe the daily is negative and also the 4 hour is negative, when you run the algebraic summation of these signs and is not giving you what the monthly or the weekly is giving you, then you have to look for another asset, and that means your M is not properly defined, because this M is an environment, is a regime, okay, is a kind of season, and you should have to understand this. So why should you trade against the season? Right now we actually need to define G. G is equals to signal function, which is the limit of the price function as U of t approaches 0 in the regime of M. Why is it that we don't want to consider U of t approaching 1? We don't need to consider U of t approaching 1, because if we can work harder and make sure that U of t approaches 0 in the environment or in the regime or in the season of M, then we don't need to worry about U of t being equal to 1, because naturally U of t will just become 1, and then the impulse signal will exist and we'll be able to trade it. Okay, so you see that if the opposite happens, that is G will be equal to 0, meaning that there is no signal, the signal does not exist. So to buy, how do you buy a market? That's what this video is trying to show you right here. How do you buy a market with a success? To buy market successfully, M must be positive for all top-down time frame. Meaning that when you run the algebraic summation of the individual M's from top-down analysis, from top-down time frame, it must be positive. Okay, so when M is positive, then the signal function must hold. That means U of t must approach 0, allowing the U of t, like allowing the impulse function to exist. So this U of t you are seeing here should be U of t subscript R, meaning that U of t in the direction of the retracement should be 0, so that the retracement will be eliminated. Meaning that this doesn't mean the retracement function will not have to occur. It must occur, but you are now waiting patiently for it to occur and then saturate. So when it occurs and saturate, that means it stop being active, it stop existing, like it stop acting. It means it is now 0. Its effect is now 0, so you can now be able to trade the impulse. Okay, so to sell, M must be negative for all top-down time frame, and UR of t must be 0, so that the impulse signal will exist. You're actually trading the impulse. These ideas I'm saying here is a bit advanced topic, but I'm just explaining it shortly. Maybe later in future I might go deep to talk more about it practically. Here I'm going to show you some examples on the MT5 shortly, and then I will end the video. Okay, right here we have the Weltrade market, and I'm gonna be checking some stuff here. Really, let's consider some fast moving asset like Flip S5. So this is Flip S5. Let us get an impulse signal, because the impulse here means the part of the price movement that is longer than the rest, that means it's longer than the retracement. The retracement is shorter part, like is short part of the price movement, while the impulse is the longer part of the price movement. The price movement has two components, impulse and retracement. Now let's start from the month. Let's first of all calculate the regime, the environment, or the season. Okay, so how do we do this? We start on a candlestick chart, and you try to mark the turning points where black and white candle come, and then switch over, like they change direction, or they change direction, and there is a break of key levels. There is a break of structure, like another candle break to succession. Okay, so you have to mark it and try to mark up to two, at least two. When you mark at least two, you'll be able to know the next thing to do. Like here we have here. Okay, so when you now compare these two key levels, these two turning points, what do you notice? You notice that they are going lower. So this turning point here and this turning point is in such a way that this is a lower low, this is a low, and then this is a lower low. Other thing is, if you can draw the trend line within this time frame, you'll be able to notice that the slope of this trend line, if you know how to calculate slope, if you check it well, is sloping downwards, so it's negative. But when you pull out a horizontal line and you try to measure the angle between, just go anti-clockwise. Okay, go clockwise like this. So when you measure this angle, you have to go anti-clockwise, so go like this. If you measure this angle, you see that this angle is more than 90 degrees. So the gradient of this angle is going to be negative. If you understand what I mean, it's going to be negative. You have to learn gradients of lines or curves so that you understand it. I'm not going to teach it. You don't really need it, but at least with your eye, you know that this is downwards, making lower lows, lower highs. Okay. Now, our M in the month, like we are going to call it MM. That is the monthly gradient is negative. Okay. The monthly gradient is negative, so MM is minus. Okay. Now the next thing is we are going to switch over to the monthly time frame. Okay, we are going to switch over to we have done the monthly time frame. We are going to switch over to the weekly time frame. Now when you switch over to the weekly time frame, you have to calculate the regime. Also we see that it is pointing downwards. The market is really breaking levels. It break here and break here, so that is breaking the levels at lower session, and so this is negative also. So the week is the MW, which is the gradient in the week. Remember, all this is supposed to be subscript, so it's supposed to be M, like subscript M, because the negative W, the gradient in the week M subscript W is equals to negative. And right now we are going to go to daily time frame. Okay, we're going to go to daily time frame, and then when you go to daily time frame, you notice, because you have to monitor what the market is doing, you notice we have this session. So you notice that in the daily, the market has both positive and negative gradients, okay, but our concern is the major event. So majorly it have a negative gradient, but at minority, with a minority like viewing the minor section of the actions, then it is positive. So right here, the day, which is MD, is what? Negative. So when you have 3 time frame from the top, if you have 3 time frame from the top down, like from the top to the down, you have 3 time frame: the monthly, the weekly, the daily, and their algebraic sum of their gradients, like the algebraic sum of the gradient polarity is the same, as that of the month. Then it means that the environment is equal to what the month give you, because it is the month that actually shows you the true and accurate information of the world of what the market is doing. So right here, we are going to say that we are going to use M, our environment, M is equals to negative. So when it is negative, what's the next thing to do? The next thing to do is to make sure that our retracement is set to 0. So if the environment is positive, then what should be the retracement? The retracement should be negative, as simple as that. So the retracement will be buy action, meaning that you are not going to be buying if you really want to succeed. You are going to look for sell. So how do you look for sell? You want a buy action to exist and complete, or if at all you want to take risk, if at all you want to sell, then you have to be selling when a buy action is likely going to complete. Like you can sell around here, sell around here, sell around here, but the best sell is when the market have 0 retracement action, meaning that since we have defined the buy action, which is acting inside this plane, once it stopped acting inside this plane and started trading outside this plane, then you know that the retracement has zeroed and the impulse have started. But if you define an absolute swing level where the market is likely going to start impulsing, then it's going to be much more better. That is why you should subscribe to our VIP, because we have the skill to do all these things. It's not easy. It's never easy. If it is easy, then you should be making a lot. You shouldn't actually be watching this video. You are watching this video because you are limited in certain ways, okay? And we have the done for you services for you to, speed up, right here. This level is going to be absolute screen point. So if market come here and create a double top, you have to take a sell, because the buy action, which is your retracement, is now 0, meaning that U of T have allowed this session to be 0. So from here, let's mark the prices and the times from here, from this time till this, within this time, the U of T is 0, meaning that because the U from this time till this time, the UR of T is set to be 1, activating the retracement session, and then the impulse UI of T is set to 0, deactivating the impulse. So the impulse is 0. So that's why I say this because this topic is just beginning. Like it's like I will do more video about this topic in future, but there are things I have not said here, so you should actually be patient in the future when I will do the next part of this. Okay, so because from this time T1 to this time T2, U of T is 0, UR of T is 1. That is why the retracement is activated. But from this time here, from this time, let's call here T prime. From this, let's take here to be T1, then here T2, then T3. So from T1 to T2, we now have U. Let's define this thing very well. Let's define. So here we now have U I of T equals to 1 and U R of T equals to 0, meaning that for the price movement only the impulse action exists. Okay, so here between T2 and T3 the impulse action becomes 0, meaning that U I of T is 0 and U R of T become 1, activating the retracement session and the market retraces. So it's left for you to be patient, which we have all the patience for you. If you cannot have this patience, we know how to have the patience so that you make it here. So you have the patience for this buy action to occur and stop, and so the next impulse you take it. Okay, you see, there is nothing like absolute power. There is nothing like full perfection. You can never be fully perfect. Okay, but if you look for accuracy as much as you can, but not really to be rigid that you must be 100% accurate, but if you try to do the right thing, you will actually be consistent in making profit. Okay, no strategy is going to be 100%, but if you do your best, you are going to get it right. But if you know that you can never do your best, you can never be consistent in this stuff, enroll for VIP subscriptions, enroll, like subscribe for our VIP signals, enroll for our courses and mentorship, so that you can step up. This is the right time to make it. It's not when you die. Okay, yes, you should make it right now and enjoy the life you want to live. You can be able to make money so that your standard of living will be as expected. Okay, you shouldn't deviate from the standard of living that you ought to have. Okay, look at people in the top class, people in the high classes, in the like people of high value, and ask yourself, like, are you ought to be there, or are you ought to be in the middle class, but you are not there? So if you are ought to be in the middle class, in the high class, and you are not there, but you are still at, you are not even at the average, you are still mediocre, you are still struggling, like walking from pay to mouth, you can't live certain life that you ought to live, then you have to subscribe to our VIP, you have to enroll for our courses. We are there to, like, we have the energy, we have the vibe, we have the community, we have the, like, we have what it takes to give you the type of lifestyle you want to live. Okay, yes, but you still need to help yourself by doing what? You help yourself by like improving yourself, because you cannot assume that, oh, we are serving you, like, let's say, giving you the best trade, giving you, what if we decide to not offer the service? So in as much as you are enrolling like we are subscribing for our VIP signal service, actually try to enroll for our courses and mentorship so that you learn it yourself. In case if we stop signal services, of which we are not stopping it, saying our signal service is active long term, for real, it's active long term, but also try to learn it, because if we didn't send signal, or if we are not sending signal maybe around certain times, maybe you might get this trade yourself and then you trade it, which is cool. Then when we release the signal, you also trade that is sectioning or hedging. Maybe our own signal is going to win and your own lose, so you have hedge. But definitely our signal is the best. It's nothing, there is no error there. Okay, I'm ending this video because it's like I talk a lot of things here, which is I don't expect to talk too much here, because we need to give you the fact that works. So you need to believe whatever we say here, because we are doing it to make sure that, like, our joy, our pride is making sure you succeed. Okay, so you don't need to talk too much here so that you can be able to assimilate it fast. Thank you and bye for now.